Meow meow meow. Everybody, I'm Cantonese Cat. Hey everyone, Cantonese Cat here. This is a 2-year yield chart right here for the monthly. I'm going to go through yields. I'm going to go through US dollar, oil, some of the major indexes, some of the more risk on plays, some of the assets that are more yield sensitive. Big cap, small cap, you name it. I'm going to try to go for as quick as possible to try to save you some time here. So first of all, the 2-year yield over here, what you're seeing here is the monthly chart. And you can see that there's a red line here that you're seeing. Now this red line is very, very important for to determine whether or not it's a bull market or bear market. This is what the line is known as the Tenkan line. And this Tenkan line happens when you pull out the Ichimoku cloud analysis. Ichimoku cloud analysis gives you several lines here. One line is Tenkan, which is labeled here in red. Another one is the Kitchen line, which is labeled here in blue. You also get a cloud looking thing down here, but don't worry about that for now. What I'm trying to show you here is that the red line during a bull market, the bull market price action flips the Tenkan line from being resistance over here to being support. And as the underlying assets continue to go up, you can see that it back tests the Tenkan and use Tenkan as a support to push it all the way up. And it did that for about 2 years or so. And finally, the Tenkan is starting to get a little bit exhausted. You can see that the line over here, the curve, you're starting to get a little bit of exhaustion in terms of the bull trend. And now it's looking like what it's going to do. It's looking like it's going to roll over just like it did over here. It looks like it's changing its velocity. It looks like it's starting to kind of roll over here a little bit. So now, another thing that I can say is I feel very bearish when it comes to yields. The reason why that is because as it gets exhausted, it back tested the Tenkan line here a few times, initially found support, but it does look a little bit exhausted, doesn't it? It bounced, but it kind of looks like a little bit of a lethargic bounce. And when it didn't really find much of a bounce over here, it back tested again. This time it failed. It broke down. Now the Tenkan so far has flipped from being support to resistance. Got rejected number 1, 2, and 3 times on the back test, and you see like besides this one over here, the last 2 months you really end up having a big wick above of it. Currently the month is still early. Today's only April 9th, so currently the yield is actually above the Tenkan right here, but it doesn't necessarily mean it's going to stay here. Now if the CPI ends up doing something crazy, now tomorrow is going to be a pretty big piece of data, the CPI, PPI, all these acronyms, all these expectations, all this, beat expectation, not beat expectation. I don't know who sets the expectations. The economists do, the market manipulators do. They're going to use these numbers to try and justify price action. Looking at yields doesn't necessarily mean that, certain things are going to have to correlate with certain other things. Yield doesn't cause things to drop. Yield doesn't cause things to go up. I think everything is all correlated, and you just try and use different indicators to try to figure out where the market is going. Certain correlation could be inverse correlation. If one thing looks like it's getting weakened and the other thing is looking like it's getting strengthened, that tells you something, right? It tells you want to look at trend for each of these things, but it doesn't necessarily mean that you need to find explanation. This is happening because that is happening. That's not, as far as I'm concerned, that's not how it works. And it doesn't matter in terms of why things are happening. They're just happening. You're just trying to find a trend, right? That's my 1-minute rant right there. What you're seeing here is that yields certainly look kind of weak, right? Broke down, back test. So far, try and back test here, but again, even the back test is looking a little bit weak over here. If you pull up, instead of just looking at a regular candle, you pull up the Haganashi candle, which just doesn't just look at this current period, but it also averages from the last period to kind of smoothen out these candles to look more smooth and kind of tell you a little bit more about what the trend looks like. It really tells you a very, very big story here, right? Back test failed. Back test pass, bounce up, back test again, failed. You can see this breakdown over here, and you see the 3 back tests over here so far is looking like it's failing to break through. Right now we're on this candle right here, which looks like it's trying to get back above, but the Haganashi candle looks like it's going to be a rejection so far. So these are just different ways to kind of look at the same thing. Right now I do believe that most likely this is going to end up being a wick because of how weak the price action is, because Tenkan has been kind of looking like it's rolling over and become less and less steep. It's looking as that we might be getting close to an inflection point over here that could end up being the inflection point that we end up seeing, somewhere around here with the back test, right? But of course, everything is subjected to change. All I'm saying is I'm looking at potential trend change. The trend change is not confirmed, although the breakdown and the back test is more, concerning for yields potentially, plummeting from here. We'll see what happens. I could be wrong. We'll see. I'll show you some of the other things to tell me that I probably am not wrong, but we'll see. 10-year yield, same thing. Tenkan, again, initially served as support to push it all the way up, right? Now, getting a little bit fatigue over here because it's really trying to break down below the Tenkan. It's not able to break down below the Tenkan quite just yet. Went back up a little bit. Look a little bit exhausted over here, didn't it? Broke down, back test 1, 2, 3, and 4. So far, all these back tests so far has failed, and the yields for 10 years certainly looks like it's getting a little bit more and more exhausted. Tenkan certainly looks like it's starting to roll over more and more, just like it did over here previously. So if you're looking at so equivocal, right? I don't feel too bullish on yields because it's right underneath resistance, and generally when things are back testing resistance, it can make you feel very bullish about the asset when you shouldn't be because it's at resistance. But people can't help but to be bullish on it. So a lot of people are talking about yields higher for longer. A lot of people are talking about yields going to end up staying higher because inflation is going to get staying higher. But things are looking like they're at resistance. So I actually don't know whether or not that's when you're supposed to get bullish on yields. But it does look like the 2-year yield is trying to break above, but the 10-year looks like it's not. So far, it's just backtesting resistance, it's found resistance already. This is pretty weak to me. Now, yields look weak. What about the dollar? The dollar, it's a little bit difficult to tell too, because what ended up happening with the dollar here is that something bearish has also happened with the US dollar. The thing that was bearish that happened in the US dollar was that it had a bearish Tenkan Kijun cross, which basically means that things could end up going down from here, and it does look like it's going to have a little bit of like an exhaustion kind of trying to push price up a little bit higher for the US dollar. You do end up having some positive stuff that was happening in the US dollar where it initially broke down underneath the Tenkan, broke back above, broke down again, broke back above again. But the problem with this breakout over here is that each of these bounds look like is getting smaller and smaller. There is something that is known as a dead Cantonese cat bounce, and that looks like that's kind of what the US dollar could be doing. I see the very similar thing that happened with Bitcoin, where it just have these like dead cat bounces over here, dead Cantonese cat bounces over here. Sorry, I'm being a little bit violent today. But that's what the US dollar is looking like. It is trying to find support from the Tenkan, but the Tenkan support seems to be getting weaker and weaker. So I'm not surprised if the US dollar end up dropping down to some of the areas down below. It could backtest the Ichimoku cloud here a little bit and bounce before going down further. But the US dollar is looking weaker and weaker just based on the way that it's looking. There is a little bit of like a descending triangle to it, and these descending triangle typically are more bearish because you're talking about having more and more supply when the demand is getting broken over here. Potentially the more to get tested, the more likely the demand is going to end up getting broken. So to summarize, so far I'm bearish on yields relatively speaking. Again, I'm not 100% sure, but they look like they're experiencing weakness. I'm bearish on the US dollar. What about oil? This is WTI oil chart over here. Oil, I'm actually a little bit equivocal. I actually don't know. The reason why I don't know is because even though it did have a bearish cross over here, in terms of the Tenkan and Kijun, it really ended up just kept on bouncing, and it's still above the Ichimoku cloud. It looks like the Ichimoku cloud could potentially serve as a little bit of support over here, although it's not surprising if it ends up finding some resistance over here at the Kijun line over here, and end up breaking down into the cloud and play around the cloud a little bit before going down. I'm not surprised by that, but so far it does look like it's forming a little bit of a double bottom over here. And the price action actually doesn't look too weak for me when it comes to oil, even though some of the longer trend looks like it could be getting weaker and weaker. And it does have that same look to it than the US dollar. It does have that kind of descending triangle look to it, which is generally a little bit of a weaker look, but it also has like this little double bottom look to it that look like could also be potentially accumulation. So I actually don't know about oil. I'm not buying oil. I'm not selling oil. I'm not gonna short oil. I'm not doing anything about oil because it looks like a little bit of a mixed bag here. So I really can't tell what oil is trying to do. I'm just going to leave oil alone. What about some of the other indicators? For example, VIX, the volatility index. Volatility index is usually based on options. If more people are trying to buy puts or protective options, a lot of people try to buy insurance on their positions using option strategies to try to protect their portfolio. If they think that volatility is coming, usually what volatility means is usually markets at risk for going down. When that happens, usually VIX will spike up. And when there are not a lot of people getting protection, when there's really not that much interest in terms of using put options to try to protect themselves for a volatile market, usually VIX end up going down, right? So far VIX has been kind of dropping down on the monthly chart. Again, Tenkan has served as a pretty bad resistance here for the VIX, and so far it's just been kind of bam, just getting rejected off from the VIX, right? Another way to look at that, if you want to look at the Bollinger Band, you also see that the 20-month moving average for the VIX has been kind of curling down. It's been kind of accelerating here a little bit. And it's just been kind of serving as resistance. Resistance can VIX spike up even more. It's been cycling around to like the 16, 17 range, but it's also kind of meeting a resistance here a little bit. So it's tough to say in terms of what VIX is going to do, because eventually it does look like it's kind of forming a double bottom over here, isn't it? And even if things kind of look like they're going down, all it takes is just maybe a couple crazy candles for VIX to kind of change trend. But so far, the VIX so far is looking like it's a bear trend. And it looks like it's finding rejection over here. So if I look at VIX, I would say that I'm leaning bearish on VIX, right? Which means that I'm more bullish when it comes to U.S. equities. This is the chart for SPY, S&P 500 ETF. What you're seeing here is, things are on the Bollinger Band are not really getting too exhausted and not really getting too overextended, because things are outside of the upper Bollinger Band over the last month, and it simply just kind of went sideways and closed so far as being inside the upper Bollinger Band to kind of cool things off here a little bit. So far looking like it's like no big deal, right? Like expected sideways. Even if it goes down a little bit, even if it goes down like 5 or 10%, like this is like no big deal. This is still very, very powerful trend. 20-month moving average is pointing up. Bollinger Band is crazily expanding, allowing price to go up higher. Price just been kind of riding up along the upper Bollinger Band, just like the previous bull market, and also just like the bull market before that. You can have these sideways candles over here, and price can still end up going up a lot higher. Same thing over here. This is completely expected volatility, so it's not anything crazy so far when it comes to SPY, right? If you look at the Ichimoku cloud, there is a little bit of a concern. Price is a little bit far away from the Tenkan, and when price gets a little bit far from the Tenkan last time, it tend to use Tenkan as like a magnet to correct price down to kind of get closer to Tenkan. It doesn't always have to be the case, but the time before that, look at the last crazy bull cycle over here, things kind of got away from the Tenkan for a very, very long time without necessarily having to all the way back test it. But things also, when things got exhausted, they really got exhausted, right? Over here, the bull market before that, you can see that things generally don't get too far away from the Tenkan. If it does get too far, things tend to go sideways for a few months and then back test it a little bit. Or things at least go through sideways here a little bit, allowing the Tenkan at least to kind of catch up a little bit, right? It doesn't always have to go down and test it, although it's getting a little bit too far extended so far. In the bull market before that, things never really extend too far away from the Tenkan, as opposed to how far we are from the Tenkan right now. So we are a little bit extended, but it doesn't necessarily mean that the bull market just can't continue. It just means that maybe it ends up dragging the Tenkan along with it and backtest it later. We don't know. But so far, I'm a little bit equivocal when it comes to S&P 500, even though it's clearly a bull trend. I just don't know exactly what it's going to do over the next couple of months. It could end up going sideways. It could end up having a little bit of correction from like 5 to 10% from the peak, and I would not be surprised by any of that because of what I'm seeing. Now, that's the SPY. What about the NASDAQ? What about the QQQ index? QQ index also is showing some similar things I'm seeing, although it actually is not as overextended as the SPY. It actually already had gone sideways for about 2 or 3 months now. And if anything, if you look at a weekly chart over here, I'm seeing a little bit of something like a very, very nice consolidation of an ascending triangle over here, a little bit of bull flag over here, if you will, which generally is actually favorable for a bullish continuation. And again, things like just been kind of consolidating for a couple months already compared to the SPY. So I do suspect that maybe the QQQ may actually be cooling things down a little bit more to allow it to go up sooner than the SPY. It's really hard to say. But there are some bullishness here that they're going on. The 20-month moving average is still pointing up. To me, there's no question this is a bull market, but just how far the potential correction is going to end up happening is going to be as brutal as it was last time. Is it going to be just like nothing where it just kind of went sideways before it just keep having this bullish continuation? I do not know, but so far it does look like it's favorable. I'm just going to leave it as that. You look at the Ichimoku cloud, it is very far away from the Tenkan, isn't it? Well, again, last time we were that far away from the Tenkan, price ended up going down and got closer to the Tenkan. And before that, you can see some sideways action for a couple of months before things get a little bit closer to the Tenkan, right? Right now, we might need to go sideways for another month or so, perhaps, maybe even going down a little bit before the Tenkan would go and catches up. So I'm a little bit equivocal. I'm either up or down on the QQQ, although I'm leaning a little bit more bullish because of that little bit of ascending triangle look. But you just never know. I mean, things do look a little bit overextended over here on Ichimoku cloud, although things don't look too overextended over here in the Bollinger Band. So I'm a little bit equivocal on that. But you know what I am not as equivocal on as would be the Russell 2000. Russell 2000 really does look bullish to me. It looks like we're just at the start of this bull trend. It looks like we're just kind of picking things up. And the trend over the last couple of months seemed to be, going very, very, very strong. We probably look like we're probably just at the beginning of this bull market over here. 20-month moving average is pointing up. We're not overextended on the Ichimoku cloud. Sorry, we're not overextended on the Bollinger Band. Although on the Ichimoku cloud, it does look like we might be a little bit overextended. But so at the same, or very, very similar spot that we were last time, things kept on just going sideways maybe for another month before going up higher, right? I think there are a few things here to think that the IWM is going to do pretty decent because it has been lagging the index. It hasn't even formed an all-time high. There's not really any talk from the Bollinger Band that is getting overextended at all. There's plenty of room for the Bollinger Band to go up, and there's plenty of room for price to continue to kind of bump the upper Bollinger Band and keep going up. It's just less of like a scary parabolic run up already. It hasn't even hit its all-time high quite just yet. Although currently it is a little bit further away from the Tenkan, but that's okay. This is one of those things that if I'm looking at the small cap, because of how far it's kind of consolidated, I actually expect a little bit more of a parabolic move and wait for the Tenkan to kind of catch up on it later, just like it did last time at the beginning of this bull market. Just like at the last time at the beginning of this bull market, I'm actually not just like the last time at the beginning of this bull market. Things can get pretty far away from the Tenkan for a very long time, and I think we might just be starting this leg over here. So I'm a little bit more bullish on the IWM here, to be honest with you. And so far, if you just compare, if you compare SPY, it looks like it's really trying to kind of taking a break over here. If you look at the QQQ, it really looks like it's been kind of taking a break over here. But if you look at the IWM, it's actually looked like the velocity is actually going up a lot faster. I do think that there is rotation going on. And I do think that there is still a lot of money that could potentially transition from QQQ, from SPY over to IWM, from the big caps to the small caps. The biggest inflection point is supposedly is going to be how rates are going to be. Because IWM, these are smaller cap stocks, they're going to be a lot more debts with these companies. They're going to be a lot more rate sensitive, relatively speaking. There are also a lot of financials over here as well. So all these are going to be a little bit more, rate sensitive. But when IWM goes risk on, it really can go risk on. A lot of the smaller speculative stocks can also go a lot, higher as a result. Now, so far we're looking at IWM, we're looking at big cap, looking at small caps. Another thing I also want to look at is another way to look at speculative stocks is the Cathie Wood's ARK K fund. you can see that it had a little bit of a breakout of this, bear market diagonal line over here, back tested and found support. So far, we're kind of, getting stuffed between the Tenkan and the Kijun over here. They haven't really crossed yet. But Tenkan has clearly flipped from being resistance over here to support over here. And right now, price is really not too far extended from Tenkan. I can totally see a Tenkan, over the next few months or so, just keep pushing up, push price higher, and I can totally see the Tenkan and the Kijun crossing over the next couple of months or so. This is actually a pretty decent look because it's not really overextended away from the Tenkan. Actually, this gives me a lot more hope in terms of its potential to move a lot higher, and it's already stabilized in terms of using Tenkan as support. So I actually like the way that the ARK fund is actually looking right now. If you look at the Bollinger Band, it's also not overextended. If anything, it's just kind of been a little bit sideways and a little bit inside here. The Bollinger Band is actually expanding. 20-month moving average is crawling up. This is just a very, very beginning of stages of potential longer-term bull trend, kind of like how we were over here, where things just kind of gone sideways over here, but it's trying to challenge up a Bollinger Band here soon, potentially. I'm actually, not worried about ARK fund as much as I'm worried about SPY and QQQ that, look like they might be a little bit overexpanded. I'm also a little bit worried about Bitcoin being a little bit overextended. It was way up for outside upper Bollinger Band, and now it's just kind of gone sideways and touched the upper Bollinger Band, which I expected to do. Like, I don't expect it to just keep going up forever. So this is actually something that I like to see. Actually, I'm a little bit weird compared to other people. I actually like to see Bitcoin actually correct down a little bit more to make me feel safer about the next move. Because next thing you know, if it keeps on going up to like, keeps going up like 80K or 100K, then the corrective move could potentially be pretty brutal. And a lot of people could end up getting hurt further down the road. So maybe I just like delayed gratification. I don't know. But so far, the price actually is still pretty healthy. Although it is a little bit far from the Tenkan underneath still. So this is a little bit of an elevated risk right here for potential correction going down. But I'm still very, very bullish on Bitcoin, very, very much long-term wise. But at this point, I'm kind of like, it could go up, it can go down in the short term. I don't know. The one thing to really talk about is NVIDIA, right? If you look at NVIDIA, Ichimoku Cloud, it does look like it's a little bit far extended away from the Tenkan, doesn't it? Just like it did over here, where price had to kind of go sideways for a few months. Just like it did over here, where price had to go over sideways for a few months. Just like it did over here, when price had to go sideways for a few months. So we are a little bit more overextended. I like to see Tenkan to kind of get dragged up here soon, but that might take another month or two or so for it to do that. So I would not be surprised at all if NVIDIA end up just kind of going sideways here a little bit for another month or two, while small cap stocks could potentially going up, while yields could continue to end up going down, and you end up potentially having rotation from these larger cap stocks, and the market leading stocks such as Nvidia over to the smaller caps. I would not be surprised by that if that ends up happening. Those are kind of my major thoughts. You can also look at a couple other things, but I think I'm going to end the video here. It's a little bit over 20 minutes. Those are kind of my thoughts. Like, so far, I'm just going to summarize everything. Yields look like it's getting weaker, which means that yields sensitive small cap stocks supposedly could be due for a run. If you look at the small cap stocks themselves in terms of IWM, it does look like the price action is pretty healthy. Nothing's being overextended. There could potentially be a run of the small cap up soon. Big caps, large caps look like they might be going sideways a little bit potentially for a little bit longer. Bitcoin looks like it could potentially go sideways here a little bit longer. But none of this has to happen. I'm seeing some trends here that I'm showing you that I think most likely would work out. It's all a probability game. There's no guarantee of any of these. But it does look like yields are getting a little bit exhausted. It does look like large caps may need a little bit of a sideways cool down. It does look like small caps are getting ready to run. That's the message that I'm seeing based on what I'm seeing from the charts. I could be completely biased because I'm positioned in the market. I don't have to be right, but I just want to show you what I'm seeing in terms of trend, because I think trend matters. Anyway, thank you for your attention. Take care. Have a good one. Bye.